You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 10th day of May, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. This is our second live broadcast for today. First broadcast is our live training room, which runs from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a button that says free trial. Click that and the journey begins. Doesn't matter what day or time of day that you sign up for the trial, you will get 5 consecutive trading days. So let's say you signed up on a Wednesday. You get Thursday, Friday, and then 3 days next week. So you're not going to miss anything. You don't have to wait. You want to take the trial? Just get on it today, and we'll get your chart set up for you this afternoon. Okay? Now, when the morning broadcast ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast at 12 noon Eastern. This broadcast, unlike the morning broadcast, is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join this afternoon broadcast. The best way, go to mytradingiq.com, scroll down to where it says Afternoon Broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll receive an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is open the email, click the link in the email, and it will automatically log you into our platform where you will have access to the question box so you can ask questions and participate in the discussion. Now, if you're out of the office, away from your desktop, or just too busy to join the afternoon broadcast, you can view the broadcast live from your internet-connected device, live in real time, or you can watch it tonight, next week, next month, a year from now. Not only do we broadcast live each day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And I highly suggest that those who are new to the world of CFRN, do yourself a favor when you have some free time. Scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick a day or 2 at random. And you don't have to listen to the whole broadcast, but fast forward to the part where I'm doing the recap of the alerts, and fast forward to the part where Michael's doing the recap of the live training room, and you'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast over the years. So, youtube.com/CFRN. youtube.com/CFRN. So, with a word of prayer, as we do every day. Yesterday, we started on a new topic, better than normal. And probably the first question that springs to mind is, what is normal? Normal for me might be different than normal for you. Normal for the United States might be quite different than the normal for, Uganda. Our scripture today is Matthew chapter 6, verses 19 through 24. And I'll be sharing with you from the Message translation. Don't hoard treasure down here where it gets eaten by moths and corroded by rust, or even worse, stolen by burglars. Stockpile treasure in heaven where it's safe from moth and rust and burglars. It's obvious, isn't it? The place where your treasure is the place you will most want to be and end up being. Your eyes are windows into your body. If you open your eyes wide in wonder and belief, your body fills up with light. If you live squinty-eyed in greed and distrust, your body is a musty cellar. If you pull the blinds on your windows, what a dark life you will have. You can't worship two gods at once. Loving one God, you'll end up hating the other. Adoration of one feeds contempt for the other. You can't worship God and money both. Now again, that scripture was Matthew chapter 6, verses 19 through 24. Money, money, money. Money, money, money. The world is full of things competing for our attention. Everywhere we look, we see things that seem to call out to us saying, buy me, or you need me. Material possessions can lure us in so strongly that we start purchasing things that may not have been on our financial radar. And before we know it, we're in a toxic relationship with money and possessions, and we don't know how to get out of it. For many people, this is normal living. Spending money to impress people that you don't even like. Does that sound normal? Sadly, it's the way many of us live. The normal way of spending and managing our money doesn't leave us in a good place. For example, it's normal to spend every bit of our income and not save any money for emergencies. It's also common to go into debt and never pay things off. It's normal to think that as long as we can afford the payment, we're good. Well, the Bible actually has a lot to say on the topic of money. In fact, it's one of the most talked about subjects in the entire book. A couple of things the Bible tells us about money is that it won't satisfy us. That's in Ecclesiastes 5:10. And that when wealth is gained quickly, it will dwindle quickly. Proverbs 13:11. In Matthew 6, Jesus teaches about money and warns us against accumulating worldly treasures. Instead, he challenges us to acquire heavenly treasures because they never end and can never be destroyed. Jesus tells us that our heart will follow where we've placed our treasure. His final and most powerful exhortation to us is that we can't serve both God and money. Now, this doesn't mean God wants you to be broke or hungry or homeless or pulling up to church on a Sunday morning in a car with the bumpers falling off, or sending your kids off to school with holes in their shoes. That's not what he's talking about at all. Now, we can keep doing what we see displayed in most of the world, or we can make changes and live life better than normal. Normal focuses on accumulating, while better than normal gives to others. Normal allows money to lead, while better than normal seeks to be led by God. Normal keeps 100% of our income, while better than normal trusts God with 90%. Normal doesn't think ahead, while better than normal lives by a plan. Normal is enslaved to debt, while better than normal saves to pay in full. Normal thinks of today, while better than normal invests for the future. Money isn't a bad thing by itself. One of the most misquoted scriptures in the entire Bible is that money is the root of all evil. Well, if you go look at that scripture, what it actually says is the love of money is the root of all evil. So we can allow it to be our God. We can allow it to wreak havoc in our lives. It's choice. The money we earn should be something we use and not something that uses us. What if we adjusted our normal mindset to have a better than normal one? Spend some time thinking through your relationship with money and just see what maybe needs to be changed. Join me in a word of prayer. Heavenly Father, we come to you today seeking your guidance and wisdom as we reflect on your words in Matthew 6. We recognize that our hearts are easily drawn to the treasures of this world, and we often find ourselves pursuing earthly riches instead of seeking your kingdom and your righteousness. Help us to keep our hearts and minds focused on you, and to treasure the things that are of eternal value. Teach us, God, to store up treasures in heaven, where moth and rust do not destroy, and where thieves do not break in and steal. We pray today that you would help us to overcome our love for money and possessions, and to find our true satisfaction in you alone. May we trust in your provision for our daily needs, knowing that you are a good and faithful provider who cares for us deeply. And Lord, we also ask that you would help us to serve you with single-minded devotion, and to not allow the distractions of this world to pull us away from your will. May we be faithful stewards of the resources and talents you have given us, using them to further your kingdom and bring glory to your name. Finally, God, we ask that you would help each of us to serve you and not money, recognizing we cannot serve two masters. May we always choose to follow you and to honor you with all of our lives. We pray this in the name of your Son, Jesus Christ. And everybody said, Amen. Amen. Happy Wednesday. I hope it's a happy Wednesday for you, whoever you are and wherever you are. If you're tuned in via the YouTube channel, you already know what the topic or the title of today's episode is. What's the difference between the S&P 500 Cash Index and the ES? Now, while we'll talk about the ES here in just a little bit and the S&P Cash Index, the same applies to any index, the NASDAQ, the Dow, the Russell. In fact, as I give you the numbers from around the world, we're going to start with the cash markets here in the U.S. Currently, the Dow is down 146 points. The NASDAQ is up 72. S&P 500 is up 2.25 points. The Russell 2000, our man in the street, is up just 4 points. So we've got divided markets. Now, as futures traders, we can trade in either direction, any time of the day or night. We can be long and short all in the same hour if that's what the chart in front of us tells us to do. That's one of the reasons that we like futures. But the futures are based on the cash index. In the commodity basket, crude oil down 85 cents. Inventory numbers came out today better than expected. Last trade went off at 72.85, and that's a gain of almost 1.25%. Gold is down 11 bucks, trading 31.90 last. Silver down 34 cents, trading 25.55 last. That's a drop of almost 1.5%. In the Asian markets at the close, Nikkei down 120 points, Shanghai down 38, the Hang Seng down 105. And in the European markets at the close, FTSE down 22, DAX down 59, CAC down 35. So that gave us a red day in Asia. It was a red day for the UK. And so far, it's a mixed Radio Wednesday here in the US of A. We got 3 of the major indices slightly in the green, and the Dow slightly in the red. So we love to see those 4 major indices the same color. We don't care if they're all red or all green. It's just that when all 4 of the major indices are trending in the same direction, that's when we find our best high probability, low risk trade opportunities. So, what's this business with the cash market? Well, the cash market is based on the index, and it's funny that they call it the cash market because you can't buy or sell the index itself. You have to rely on a derivative. When it comes to trading the stock market, there are several instruments available to traders. 2 of the most popular are the S&P 500 Cash Index and the ES Futures Contract. While they may seem similar at first glance, there are some key differences that traders need to be aware of. So we're going to quickly explore the differences between the cash index and the ES futures contract and the advantages and disadvantages of what you're using to chart your course for trading. Because remember, the cash index, you can't actually buy or sell that. You can buy options on it. You can buy futures based on it, ETFs based on it, but the actual index itself, no. Now, the cash index represents the value of the underlying stocks in the S&P 500 index. Same applies to the Dow, the Russell, the NQ. It is calculated based on the market value of the stocks in the index, and it reflects changes in the overall value of the index. The S&P 500 cash index is updated in real time during market hours, and its price is determined by the bid and ask prices of the underlying stocks. So if you could take a snapshot of the current price right now of every one of the 500 stocks that are part of the S&P 500 index, add all those prices up, divide by 500, because there's 500 companies, that number would give you the current value to the decimal point of the S&P 500 cash index. So it's the buying and selling of stocks that creates the index. Futures, ETFs, options are traded based off the index, which you can, again, actually buy or sell. But the S&P cash index stops updating when stocks stop trading at 4 p.m. Eastern, Monday through Friday. Now, here's what happens. The Asian session opens, and Asian traders are trading. In fact, Asia was down pretty good early on last night. And then at 3 a.m. Eastern, European markets open. European traders are buying and selling stocks. So when 9:30 a.m. rolls around and the S&P and stocks start trading on Wall Street, then the S&P 500 cash index comes back to life. So how do we account for all of that stock trading activity that transpired overnight? If you look at an S&P 500 cash index chart, you're going to see that almost every day, without fail, there's going to be a gap up or there's going to be a gap down based upon the trading activity that happened overnight. On the other hand, the ES futures contract is a derivative instrument that tracks the value of the S&P 500 cash index. It is a legally binding agreement to buy or sell the S&P 500 index at a specified price on a future date. Futures contracts are traded on futures exchanges, and the price of the ES futures contract is determined by supply and demand in the market. One of the main advantages of trading ES futures is leverage. Futures contracts require a much smaller margin than buying or shorting the underlying stocks. Now, remember, futures follow stocks, not the other way around. And that's easy for someone new to the world of trading to misunderstand, because futures, well, that sounds like what's, going to happen in the future, when in fact it's not. It's tracking what's happening right now. So futures follow stocks, not the other way around. It's really important to understand that. Now, because of the leverage, traders can control a larger position with a smaller amount of capital. However, this leverage also increases the risk of losses if the trade goes against the trader. Which is why we teach you to always use a hard physical stop. When you put on a trade long or short, the potential for profit is unlimited. Potential for loss is unlimited as well, till your account runs dry, unless you put a hard stop in place. If you were to take the price right now of the S&P 500 cash index and multiply that times 50, that would tell you how much you're controlling. At the current price of the S&P, you can purchase or sell one S&P 500 E-mini futures contract during the day session with most brokers for roughly $600. Some brokers charge a little more, some brokers charge a little less. But $600 is pretty much average. So when you buy or sell that one S&P E-mini contract, you're controlling over $200,000 of S&P 500 best of breed equity. And you're not counting on one particular horse to win the race. If you're long, then that's because the majority of the components of the index are rising. You go short, it's because the majority of the index, the underlying stocks themselves, are dropping. It's about the best deal in town. For $600, you're controlling. Back until we had this sell-off a couple days ago, it was getting pretty close to $250,000 that you control with just $600. Now you might say, yeah, well, I've heard about leverage and people can lose their homes. All you're going to lose is what's in your account. But you don't have to lose all that's in your account. You can say, I'm going to buy or sell one S&P contract, and the maximum risk I'm willing to take is $100 or $200 or $300. You determine how much risk. You've got this unlimited upside or downside, okay, depending on if you're trading long or short. But your risk is limited by you. You predetermine the risk before you enter the trade. Now, many traders predefine their target as well. When you're watching Michael trade in the morning, he trails his stop so as to be able to lock in as much profit on any potential move. As you gain experience as a trader, you may choose to do that as well. In the beginning, I recommend that you use a bracket order where you have, with one click of the mouse, enter the trade, and you automatically have a predetermined target placed for you and a predetermined stop loss placed for you. When I first started trading futures back in 2006, they didn't have bracket orders. You had to put on your order for the entry, then you had to go and put on an order for the target, and then you had to go and put on an order for the stop loss. And because most people, once they enter a trade and the adrenaline rush starts, they don't want to take their eyes away from the screen, so they never get around to placing that stop loss or even the target. And that's how so many accounts end up getting blown up. Another advantage of trading the ES futures contract is that it is available for trading outside of regular market hours. Futures exchanges are open 23 hours a day, 5.5 days a week, which allows traders to take advantage of news and events that occur outside of regular market hours. Trading the S&P 500 cash index, on the other hand, is just not something that you can do. In terms of liquidity, both the S&P 500 cash index and the ES futures contract are highly liquid instruments with a large number of buyers and sellers in the market. This means that traders can enter and exit positions easily, and the bid-ask spreads are typically tight. If you come from a world of stock trading, you may have made a great investment and price ran up astronomically. There was a parabolic move. In order for you to get out of that trade and reap your profit that you earned, somebody has to be willing to take the other side of the trade. Now, if it's a highly liquid stock, like say Microsoft or Walmart, then there's almost always someone on the other side willing to take that. But let's say you're going into close on a Friday afternoon and you do not, after this parabolic move, you do not want to be long over the weekend. There is a possibility that there may not be a counterparty willing to buy what you're trying to sell. Remember, you bought low, now you're trying to sell high. There may be someone there, there may not in the world of stocks. With futures, I've never seen the S&P 500 with a spread of more than one tick. Not in the morning, not in the afternoon, not in the evening, not at midnight. It's tight. While both the S&P 500 cash index and the ES futures contract track the value of the S&P 500 index, there are key differences between the two. Trading the ES futures offer leverage, flexibility, and the ability to trade outside of regular market hours. Look at your goals. Look at your risk tolerance and make sure you have a time-tested trading strategy, and make sure you have someone willing to teach you that strategy. No matter what career path you take in life, you're gonna need somebody to teach you how to do the job. No one was born with the innate knowledge of being a plumber or an electrician or a nurse or an airline pilot, etc. Everybody knows whatever career path they choose, from banker to lawyer, candlestick maker, you're going to need somebody to teach you how to do the job. And 9 out of 10 traders don't have that. That's why 9 out of 10 new traders fail. Because they've got videos. YouTube's full of them. We got 2,200, right? But the videos alone don't teach you how to trade. You need an actual living, breathing instructor who's willing to teach you and answer your questions on a daily basis. And if you can actually find a place where you can have one-on-one meetings with that teacher, wow, you may have just found the golden egg. Shameless plug for our own service, where we provide all of our lifetime members with unlimited one-on-one private mentoring. So that's the story of the cash index and the futures market. Let us move on to Logic 247. This is our 24/7 around-the-clock E-mini alert service. It's not just E-minis. It's also crude and gold and silver and the euro and bonds. We're in week 248 since we rolled out Logic 247. Over those 248 weeks, we've issued over 14,000 individual handcrafted alerts. Since the market opened this past Sunday night at 6 p.m. Eastern, we've issued 27 alerts, 6 never triggered, Still waiting on 3. Now that was as of 7 a.m. This has changed, and Valerie will update the recap this afternoon and again this evening. But at 7 a.m. this morning, we had 18 actionable alerts for the week, of which 2, or 11%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process we teach all of our lifetime members. The one caveat is you never risk more than the potential profit in a trade. Now, an alert might have $1,000 of potential profit, $2,000. You just simply take the entry price and the final trade to target, do the math, and that tells you the potential profit I see in the trade. However, if going in, you know you're going to get out at the initial target and just be done for the day, you shouldn't risk more. Even though the actual alert shows more potential profit, if you know ahead of time you're going to get out at the first target or the second target or the third target, the maximum you want to risk is $300 per contract per trade, less when possible, based on market structure. So far, great week. Over the last 248 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile I just explained. So now we'll go to our original alert service, concierge trade alerts. And they're a little different. Number one, they're based on historic price action. When historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs do not come out around the clock. They're posted as a static report shortly after the Globex open. Last night I got them out a lot earlier than normal. I usually have them out by 6:30 Eastern. I got them out last night at 6:05 because I just happened to be sitting at my desk when the market's open. So as you can see, there's a long and short target for each market. Okay, so we'll use the ES as an example. The first thing you do on your 30-minute chart is you make note of where price is at the time the report is published. It's always going to be between these two numbers. If price gets above the 30-minute BVC, it's trying to get to the long target. If price gets below the 30-minute BVC, it's attempting to reach the short target. It's that simple. Now, you still have to look left to spot potential obstacles, previous swing highs or swing lows that may become support or resistance. And you have to learn how price behaves around a weekly trading zone, because price is always trying to reach a zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the BVC on the 30-minute chart, it's trying to get to the zone overhead. If price is below the 30-minute BVC, it's trying to get to the zone below. Okay? Oh, and while you're putting a note on your 30-minute chart of where price is at this time, draw a line in the sand here at the long target, line in the sand here at the short target. Those will serve as great visual cues to keep you on the right side of the street. So let's jump to the daily chart. Michael should be here momentarily. And whatever markets we don't get through, when Michael comes in, he's going to give us a recap of the live training room. And then we're going to trade for 30 minutes live on TradingView. And then I'll finish up the recap of the alerts, whatever I don't get to. All right, here's the daily chart. I got rid of the question to see if it would make any difference. Just to be funny, I guess. But here's what happened. Markets opened last night. They ran up like they were going somewhere, and then they failed. Actually, the run-up happened this morning when the news came out. We had a couple of high-impact news events at 8:30 this morning, and so price ran up, and then it ran right back down. That's not uncommon. When you have an economic report that sends the market higher or lower, when the dust settles, price is quite often right back where it was before the news event happened. Okay? So we're sitting right on top of the daily BBC. We know that resistance is at the high of today's session, and then the high of May 2nd, and then the high of May 1st. We know that support is right below us at the green line, the BBC step line, and red and falling. Those three are bunched up. Just like coming up here, we had three bunched up as potential resistance, but we got through them. So now coming back the other way, those same three are bunched up. If we close below today's low, which has spiked below those indicators, then it's highly probable that we're headed back to the 24% Fib retracement. Now, the Fib retracement is based on the October 13th low, where we're in a downtrend. We've been in a downtrend well over a year now. The low of the downtrend came in October 13th. The bounce off of that low came in February 2nd. And so we've hit the 38 Fib and bounced. We've hit the 50% Fib retracement and really bounced. And now we've pulled back to the 24 and bounced. We've pulled back to the 24 and bounced. And if we pull back to the 24 again, probability says we'll bounce again. But notice that this bounce put in this high. This bounce put in a much lower high. So if we close below these indicators today, then you should definitely be thinking short. Now, the purpose of looking at a daily chart is the institutional traders who actually move price because of their account size. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So if we know who moves price, it would do us well, no matter what market we trade, to spend 2 minutes seeing what the deep pockets are doing. So the deep pockets did run price up on the news, but they had no conviction, and the gains were quickly erased. So while we have 3 layers of potential support below us, as the day continues, unless there's some exogenous event outside the markets, I think we probably close around this area, possibly below these indicators. And if we do, that begins our path to the 24. Okay? All right. Now, this is the 30-minute chart that all alerts are based on, both the logic and the CTAs. Here's the ES 30-minute chart. Here's where we opened last night. I was on a mentoring session yesterday afternoon when I drew in this little window of opportunity, and the first candle didn't fill it, but it filled, and it filled, and it filled again. Filled 3 times. Okay, it's not unusual. So then the market is open, and we go sideways, just kind of hugging 30-minute BBC. We make a failed attempt higher. Price gets below the BBC, trades down through the zone. It's the short target. Now, when a candle slices through a zone on the 30-minute chart like it's not even there, what will typically happen is price will reverse. When it runs out of steam, it will reverse back to the zone it sliced through and continue in the direction of the slice. So while it did that to a slight degree today, it's not really the way we typically see it happening. So we hit the short target, we hit the long target. Okay? Either one of those was more than ample to give you your goal for the day. When the indicators are bunched up like this, that's no trade zone. But once they start to open up like this, that's when you want to be in the market. And so from 41.33, we dropped to 41.25. That's 8 points. $50 a point, $400 per contract traded. The 10 contract trader, it's $4,000. But in the beginning, you're trading in sim until you qualify to go live per the 2420 blueprint. So we hit the short target, we hit the long target, and now we're back below the BBC. We've got red and falling overhead. So chances are the market is going to find some support at the zone below and consolidate. 70% of the time, that's what the market does at a zone. It consolidates. Okay? So we hit the short target, we hit the long target, and we just by, I don't know, a couple ticks, missed hitting the short target again. And before the day's out, we very well may hit it again. On the Dow, market opened flat. That failed move to the upside. Quick drop down to the zone where we found support. And then we reached down and touched the target. And then we caught that news bounce that took us up to the long target. And when the dust settled, where'd we go? Back to the short target. And now what's happening? Got a bearish cross right here, red and falling. When the red line crosses the green line, the BBC, that's a bearish cross. So we anticipate lower prices. The low of this candle is potential support. Beyond that, there's not much in the recent past to get in our way of price reaching the zone below. And that very well could happen before the end of today. On the Russell, here's where the market opened. Price dropped to the zone where it found support. When price drops to a zone, we expect it to find support. Like that. Like this. This was a bit of an aberration, but we go right back to the zone and consolidate. Catch a bounce yesterday. It tied right in the Monday high right there. Not the high of the session, but the high put in near the close on Monday. This is Monday, this is Tuesday, this is today, Wednesday. Wednesday started last night, Tuesday night at 6 p.m. Eastern. So we found support at the zone, resistance at the zone, support at the zone, bounced. Now we're coming back to that zone again. Now in order to hit the short target, we've already hit the long target, but to hit the short target, we got to trade below the support at the zone, this low, and this low. So your window of opportunity is pretty minute at this point. So you'd probably be better off 56 to 54. I would take that window of opportunity. That's enough to give you your goal for the day. Michael, let me know when you're ready. On the NQ, here's where we opened last night. That vertical line separates the days. Okay. We came down to the zone. We hit the short target. Then price got above the BBC. In doing so, red and falling turned to blue and climbing. We hit the long target. And then we ran into the zone overhead, which we expect to be resistance. When price drops to a zone, think support. When price rallies up to a zone, think resistance. Right now, on the NQ, we're pulling back to the BBC. The pullback holds more often than not. On this candle here, we pulled back to the BBC and caught a beautiful bounce. So we expect the same thing to happen again on this pullback until proven otherwise. The fact that the step line has crossed blue and climbing tells us to expect a pullback to the BBC. On crude oil, here's where we opened last night. Market dropped to the zone, found support, bought a bounce, all the way up to the zone overhead where it found resistance. When the market finds resistance, it's going to go look for support, which it found again at the zone. Support, 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 support. On this candle, we reached down and tagged the short CTA target. We then bounced back to the BBC, and we're just kind of consolidating sideways. If price gets below the step line and red and falling, okay, because they're directly below price, they're acting as support. So you've got a small window of opportunity from about 72.60 to 72.50. That would give you your goal for the day. If you don't already have it, hopefully, with as much movement as we've had today, you already have it. Michael, are you having trouble logging in? Let me look at my phone, see if you've sent me a message. Better message him and see if he's having problems. He's usually here by now.
Okay.
There you are.
Right. Here I am.
I was just worried. Okay. All right, guys, I'm going to stop here with gold. And once we're done with the recap of the live room and the trading view, I will cover the remaining markets that we haven't gotten to, which is only, I think, silver and the euro. Stick around, because good things happen. All right, buddy, looks good.
Okay, here we go. Good afternoon, everyone. Today is the 10th day of May. The 10th day of May, 2023. If you have not taken a free trial with us and want to take the free trial, go here to mytradingiq.com. Right here, just click on that. Once you take the free trial, you're going to want to go to trading platforms and give us the information we need for whatever trading platform you want to use. All right, and be showing you stuff here in TradingView and probably on DT Pro. I did show some stuff on NinjaTrader this morning. So if you have any of those platforms, just gotta follow the instructions on this page and give us the information we need to get you activated. Spreadsheet today was a much better day than yesterday. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we were 9 ticks on the NQ, 43 ticks in crude, 6 ticks in gold, and we lost 3 on the ES. Puts at 497.5 on the morning session. Today took 11 minutes and 3 trades to get to the goal for the day. That one we're up at 875, and we took a total of 22 trades this morning. So on the month now we're at $2,777 over 8 days, averaging $347 per contract per 2-hour business day. On the year, we've gotten our goal now at 86 out of 89 days, and we are currently at $43,822 on the year. That's one contract, 2 hours a day, averaging $492 per contract per 2-hour trading day. If you were to quit trading when you get your goal for the day, and you were to add one contract per month, so far this year you would have only had to work 26.88 hours, and you'd have averaged $1,246 per hour for those 26, just about 27 hours. $1,246 an hour. Not too bad if you can get it. All right, let's jump right into what we have. I got a little bit of a later start than I had anticipated. On the gold today, there was a lot of movement on all the markets today, but let's just go into the gold to begin with here. I didn't have anything right at the beginning of the day. At the beginning of the morning, I'm trying to say, oops, get that back where it was. It goes down there. There was some action right at the open, but I didn't get any of that. Then it moved up, it moved down. We were looking for right in here was what I was looking for, but I didn't end up getting it. Turned around and gave this short right here. We're looking for a lower swing. After that, I didn't get that one. I didn't get the lower swing either. but we did finally grab onto this one on the gold, and we picked up just one tick on that, and we jumped on this one over here as well. We got 5 more on that, putting us at +6 on the gold. Since then, the gold is given nothing right there. The long-term direction is really flat in here. See how it's starting to spread out a little bit more right now? That's another thing that would have kept me from taking trades in here. I would have been looking for a higher swing, and this might have been the only trade I would have taken during the break. Okay. Crude oil now. Let me get the question box up a bit. Here it is. Okay. In the crude oil. Go all the way back to the beginning. Again, on the crude. Here we go. So our first trade on crude was right in here. We picked up 14 ticks on the first trade right here. That might have been where we got the goal for the day. Is that about 11 minutes in? Yeah, it is. That's probably where we got the goal for the day right there on the crude. We picked up 14 ticks. No, actually, it was an NQ trade where we got the goal for the day. The next trade, break even on the crude, and the one after that, we picked up 2 more ticks to get us to 16. Then crude inventories came out here at 10:30, and I did get this. I don't think I put an arrow on it, but I got 20. I went from 16 to 36, so I got 20 ticks. I don't know if it was this one or this one. No, okay, it was this one. I got 20 ticks on. I went from 16 to 36, and I got 2 more ticks to go to 38. And then somewhere here, I got 1 more trade because we went from 38 to 43, so I got 5 more ticks. Ended up with plus 43 in the morning session on crude. Okay. And the ES, we didn't have too much going on with the ES. Let's just hit alt and back on this. Okay. There it goes. It's not going very fast, is it? That's a little better. Okay, here we go. On the ES, this is our first trade on the ES right here. I believe we got just 2 ticks profit on that. Then we stopped out on this. I didn't take this. I should have had this trade right here. I did actually take it. I got 7 ticks, 7 points profit on that, 28 ticks. But I didn't count it because at the time I didn't have this arrow. I had the trade on there and I forgot about it. And then I ended up getting 7 points, but I didn't count it. Then I got this one for 2 ticks, and then I stopped out -8. I'm -10. So that put me at -8 at that point. Right here, I got 1 more to get me to -7. And then we had 1 more trade here that I actually did do. Right here, we got 4 more ticks there to get us to -3. The markets were moving around nicely today, so there was plenty of opportunity to take profits and trades and everything. During the break here, we really didn't have anything in the direction change. You want to wait for a pullback and test it ribbon, which we got right here. That would give me a pretty decent return right there. Since then, there has been nothing. It's about to set up a short right here, though. Okay, and that was the ES. We ended up with -3 on the ES, -3. And the NQ. I was back and forth quite a bit on the NQ today. The NQ is where we did finally get our goal for the day. After 11 minutes, finally, I say. After 11 minutes, yeah, I'm trying to scroll it back as fast as I can here. Okay, that's not scrolling it back very fast. I'll just do it manually. Okay, I'm gonna hit auto, bring it back into view. That should pretty much do it. Pretty close. Here we go. All right, so this was our first trade on the NQ. It is now, wow, it's 101 already. I gotta be quick with this. Okay, we're gonna jump into the live stream as soon as I'm done with this, but on the NQ here, we need, first one, we made 6 ticks in profit. Then this one right here, I went to move myself to break even. I got -1 tick. We're at 5. Then this one we gained 30, so we're at 35. That's where we got the goal. Then we stopped out right there, went down to 15. Then we stopped out again, went down to -5. Then we had 30, right? It got us back up to 25. We had a break even, 4 more there to get us to 29, and stopped that right there to get us back down to 9. And that was when we ended on the morning session. We might have taken a couple more trades in here, but we didn't gain any more on the NQ. You can see there were some decent trades in here. Look, there was one here that I took that I didn't count. And let's see, was there any other ones I took that I didn't count? Nope, doesn't look like it. All right, so right now, guys, I'm going to jump into the live stream over at TradingView. If you guys want to get into live stream, go here to tradingview.com, and here at tradingview.com, go to community live streams, scroll down to right there. Let me refresh this page over here. Scroll down to right here and click on that. Actually, that is going to be, that's an upcoming stream right now, but that is going to change in just a second to be live streams. It'll be in just a second. Let me move this over and show this and this. Okay, and the stream is now beginning, but I don't see what it's showing. Here go that and that, and share. There you go. That's kind of a clunky beginning to the live stream today, but let's connect on this and we'll jump right into the trading. Okay, this is going to aggregate too many ones going at the same time. Close this one. Okay, let me try it again. I'll click on this and entire screen, click on that, share. How about now? All right. Give it a second. Give it a second, catching up on my computer here, I think. How about now? This, I can shut that off. Yeah, any, okay, they're coming up. It's taking them a second. Yeah, I just did that. I just did. It's just taking it a second for everything to happen here. I think there's a little bit of a delay right now. Yeah, because I'm watching what's showing over there, and it's still not populated on my screen. Here we go. Now it's populated on my screen. Now it should be on your screen too. All right, here we go. All right, so let's jump into this right now on gold, guys. What I was going over right before this in the morning session, we ended with +9 on the NQ, +40 crude, +3 on the ES, +6 on gold is how we ended the morning session. Where we stand right now, gold is moving up. I don't know what just happened there, but gold is moving up and needs to put in a higher swing, which it just did. And in just a second here, we'll have my indicators and I'll be able to give you more information. I don't know what's going on with this. I do have an idea though. Let me close this thing. If Ninja Trader running in the background, that always seems to be an issue. Okay, there. That one is gone. Now that should be helpful. All right. So right now we got a higher swing over here on the gold. That's what I was talking about. We need that to pull back. We have a lower swing here on crude. That is pulling back. Now when the crude has got to get up here and get into the ribbon, or the black line has to get into the overbought trade up. Right? That's what we're looking at there. We didn't put in a lower swing to the ES. We don't have anything there. And the NQ looks to be changing direction. So we need a down close right here. 75 down to 67 on the crude oil right now. Is what you're going to be looking at. 75 down to 67 on the crude oil. The higher swing gold, so we need that to pull back to get this black line down here into sold to get price into the ribbon. Now, I know this was kind of a rocky start to today's live stream, but it is what it is. We got to go in now, and what we are looking for is just for the trades to set up. This right here, not in the overbought section yet. So it's not going to give us a black arrow on a down close. I know that for sure. But it is going to touch the ribbon and give a down close. So that would be a ribbon trade right there on the NQ. I'm on crude oil. Sorry, it's got a high of 75. Now, because these are 7-tick range bars, I know that the bar is going to close right there at 68. And when it does, I want it to fill me at 67 like it just did. And now I will show you in just a second how and why we do stuff the way we do. And we got to get one more tick in profit here. There it is. Okay, so now stop goes to break even. Now, in here, if you go to trade rules, go to mytradingiq.com and go to trade rules. I'm going to lock in a couple of ticks. Go to trade rules. These are the rules for the trade setups in here. Now, I'm going to lock in some more profit on that. We're up 4 now, 5. Looking for a good target on it. Right here is a good target number right down there, 57, 8. So I have 8 ticks locked in on this trade right now, and it's looking like 50 right there is a good number. Okay, so we need 8 ticks on that first trade. Now, let me go through everything that I did right there. The charts is still getting up. I'm going to go through everything that I did there. Okay, and why it is looking like a good number to me. We put in a lower swing there, so we didn't hit 50 yet, so 50 might still be a good target number for us. Okay, I'm going to draw that down there for potential target. All right, so step 1. Every trade has 3 steps: the entry, the risk management, and the exit. In this case, step 1 was the entry. Price came up, it hit the ribbon. The long-term direction is bearish, and the black line here is in the red. All right, we didn't need the slingshot for this one. All right, so this is a short trade without the slingshot. These are the rules for the entry. Right. First of all trades must come after a lower swing for a short, and it must be in the long-term direction. The long-term direction is bearish. The lower swing was right here. This is a new lower swing right now, by the way. So the long-term direction is there. The lower swing was right here. So then, the short trade without the slingshot, the black line and ribbon must be on top and in the red. Black line is on top and in the red. All you need is for price to come up and touch the ribbon and give it down close. So you can sell the down close. Now, these are 7-tick range bars. So every bar is 7 ticks high. So you saw me when I knew what the high of the bar was, I knew what the low of the bar was going to be. So I was able to put a sell stop limit 1 tick below where the low of the bar was going to be. That's why when the bar closed, it triggered me right into the trade. And then that is the end of this part. The entry, I did that perfectly. I executed that perfectly. Then you have to do the risk management part. Now these are 7-tick range bars, right? So with a 7-tick range bar, you have a 10-tick stop, which I did have originally. I had a 10-tick stop originally. But the stop goes to break even after you get 4 ticks in profit. Just watch me put that stop at break even after 4 ticks in profit. All right. And then, so I did this part, the risk management, exactly correct. All right. Then you have to do the exit. And down here in the exit, look left for prior swing high or low for support or resistance. In this case, the swing low was right here. All right. 72.59. That was one number to look for. And then learn to read the DOM to find potential numbers that it's searching for. That is where I got this number from. All right. So then I did the exit perfectly. So that is all you really have to do. Now, if you learn how to do those 3 steps, you just do them over and over and over again. And that was trade after trade after trade after trade after trade all day long. Right. Those were the 3 steps that I had to do, and those are the 3 steps that I did. So right now we have the long-term direction is bearish. We have the lower swing, but we don't have either of these right here. Okay. All we have so far are these 2 things. All right, the black line is not, well, the black line is on top, but price has to come back. See, the black line is on top, and that's good, but price has to come back and touch the rib, or the lead line, the black line down here, has to get into the overbought. Neither of those have happened, so you don't have a trade here yet. Okay, now going in the opposite direction over here on gold, we put in the higher swing. So we have the higher swing, we long-term direct. Now we need price to pull back down, get into the ribbon, or for the black line to get into the oversold. Over here on the ES right now, that moved down, put in the lower swing. So we have the lower swing, we have the long-term direction. What do we need? We need price to up, get into the ribbon, or the black line to get up into the overbought. Right, see, it's all starting to come together over here on the NQ right now too. The long-term direction is bearish, we have moved down. Now we need price to, we have the lower swing, long-term direction. We need price to get back up into the ribbon, or for the black line to get up into the overbought. It's very mechanical, same thing over and over again. Okay. Does anybody have any questions about that? Any of you guys in the live stream, if you have any questions, if you want to see another chart, if you want to see, anything other than futures, if you want to see a crypto, forex, ETF, just go type in the symbol. What's that up here? I don't know what the heck is going on, but I can tell you right now, we don't have a trade set up here yet. We don't have a trade set up here yet. We have one pretty close coming up here on the anything. See, the black line is up into the overbought right now. So this is pretty close. There's the trade on the NQ right there. No, it's not yet. I'm sorry, it's not yet. There's the trade on the NQ. Okay, there's the trade on the NQ. We got the black arrow right here. We had to come out of the overbought area. So right in here is the trade on the NQ. Here, we had to come out of the overbought area. So there, I just threw it on. And here it is. Now, every trade starts out on the NQ because it's 16 tick range. Every trade starts out with 20 ticks of risk. Okay. Now, this is all automated on the NQ. Once I put the trade on, then the stop goes to break even automatically after 8 ticks in profit. Right? Because this is a 16 tick range. Right? I just stopped out on that one. But because this is a 16 tick range right here, there's a 20 tick stop. And the stop goes to break even after 8 ticks in profit. Now, this one wasn't a great trade for me. This should have been the spot where I went short right here. It would have stopped me out there. I ended up going short over here, which I shouldn't have done. So that wasn't a great trade for me. That was kind of a mistake. But it took a lesson, didn't it? Over here on the ES right now, we're up into the ribbon. So the rules. We have the long-term direction. We have the lower swing. Price has to go up and get into the ribbon. The black line here is in the red. What do we need? This is a short sell with or without the slingshot. The black and the ribbon must be in the red. This one is going to be without because this is not overbought. So we need a down close. Now this is the ES. These are 7 tick range bars. So the high of the bar is here at 28.50. So we're going to sell right there. 26.50. That's 8 ticks below the high of the bar. So 7 ticks below the high of the bar is where the bar is going to close right here at 26.75 if it closes down. It's going to be right here. So I'm ready to take that next trade. All right, I'm ready to take that next trade if it happens. You can do that stuff ahead of time. You're using range bars and you know what the trade setups are. You do all that stuff and you're ready for every trade as they come. Okay, so the low of the bar. The low of the bar is going to be right there at 26.75. That's as far down as that bar can go. There it is. It just did that and it just triggered me in. So now I'm short. What do we anticipate? Well, we want to get down to here anyway, to 24.25. Right, 24.25 is right there. It looks like it should go, it has to go 4 ticks into profit to move the stop break even. So it'll go down 1 more tick to move the stop. Okay. Now it's 4 ticks from my entry. Right, it's always 4 ticks from my entry, not 4 ticks from where I think I should have entered. It's 4 ticks from where I actually did enter. So there it is. Stop goes to break even. Now, if we jump here, jump back over here. Now, was it 24.25 is what I said for the target number, the initial target number? Right here, 24.25, right there. I like this number a little better. Okay, so I'm going to lock in a little bit of profit on this. I'll go back here to the rules, right? The rules, the entry, I did the entry perfectly. Risk management, I did that just right. Got the stop to break even from the 7 tick range after 4 ticks in profit. Now we're down here. Looking left, that was the 24.25 number right here. And now the DOM is this number right here. Okay. So now we locked in a couple of ticks of profit. Oh, are you kidding me? And let me. Okay, good. Well, hopefully, I'll get in the recording. All right. So what we're looking for here now is for it to finish everything that it should do. I don't need to see the chart to know what it should do right here. I can lock in a little bit more profit on it. Now it's gotten down to the swing low. Remember, 24.25 is what I said was the swing low, right? Right here. Down to the swing low. And now the DOM is giving us more information. The DOM all the way down here. Now I'm out of the trade with whatever profit I just got in that. I'm out of the trade with that, but the DOM is suggesting all the way down there to 21.25. Okay, so the DOM had a couple of suggestions for future trades. One of them is all the way down here at 21.25. Okay, remember back here on the crude, I said this is something I should go down to after it took us out. Listen on that one. If it were to give us another trade, this was the number that the DOM had given to us. In here, it gives a couple more numbers. This is one of them right here. But so on the ES, we just took that profit right there. Now that the rules for that are the short trade without the slingshot. All right, that was the rule for the entry on that one. See, it's the same thing over and over and over again. Simple. Crypto example or two. What do you want to see? Which crypto do you want to see? Crypto doesn't move as fast as futures, so you're probably not going to see anything as quick as this. But I can drop it down to a smaller time. What would you like? Just give me any crypto that actually has some volatility. Okay, over here right now on the NQ, we need a down close. This is in the overbought. The down close. Now it's in the ribbon and the overbought. So the highest probability trade on the out of the ribbon with an arrow. Those are the highest probabilities. Okay, so we may get right in the NQ right now. And still on the ES. Hold it. Let me check this out here. On the NQ right now, we have a high up here of 20, so we're gonna be selling 16. Well, right below 16, 15.75.
If you want a high volatility crypto, I would think Pepe, P-E-P-E, the one that ran up some 20,000% or some crazy number, I forget, and then sold off hard.
Okay,
so
I just took the NQ trade. I'm locking in profit on that. This is a 30-tick target on the NQ trade right there. I'm locking in profit. That is 5 was 20 ticks profit on the NQ trade because that just triggered probability traded ribbon like that. All right, so let me check this out. I don't have anything else going on. Pepe, you said. Okay, here's another trade here on crude. Hold it. I'm in here to make money too. I'll just show you guys this stuff. So we had another trade here on the NQ. Now that one made up for the stop out that we had a few minutes ago. That red one that we had. We had that mistake that I made. I gotta put that on too. What time is it? 1:20. Okay, so we have 10 minutes left in here. We go look at that. The gold. I'm gonna do it on the gold chart. Let's expand this a little bit. Expand this just a little bit. Buck that over a little bit. The crude, the number on the downside, I didn't give you a second one on the downside today. 28, 72.28 is what the crude should go to. Let me draw that in there for you really quick. Now, if you guys are in here on the live and you wonder where I'm getting these numbers from, take the free trial. If you need indicators, take the free trial. The only way you can get the indicators is take the free trial. We have to authorize it for you. All right, so we're going to come here and look at O and PEPE is what's in. should look at that on Binance probably. Wow, look at all those decimal places. All right, we're not going to be able to look at this on a 7 range. Let me see. I don't know if I have that many. 1, 2, 3, 4, 5, 6, 7, 8. I don't know if we can do a sensitivity out to 9 decimal places, but let's see. 2, 3, 4, 5, 6, 7, 8, 1. Yeah, okay, that worked. All right, so we probably can't do this on the 7 range. I don't know what range you do on, but 90 decimal places. I don't know if this is going to be a good solution here. We're checking these out, but we'll try. Okay. Well, let's look at a daily then. All right, there is not enough data on this, or at least it's not showing me enough data. I don't know. Yeah. Let's look at something. Let's look at something else like Litecoin here, because there's just too many places to talk about it. In here, this Litecoin, this chart, so it said to go short back here, but if you look at this with that many decimal places, let's just do a 50 range. Okay. Shrink this up a little bit. Oh, my data's coming in really slow. Okay, so this is what it looks like with a 50 range. That means every one of these is 50 cents, right? So in here, you get the same stuff. You get a short right here. Long-term direction is bearish, it pulls back up, comes out of the overbought. Same thing again in here. Right here, you actually just hit the ribbon, and the ribbon gave you a down close. So when you'd be anticipating it's going to get down to this level right here. Okay, that's what you'd be looking at right there on Litecoin. Now, that crude trade a few minutes ago was starting to work here. I took that a few minutes ago, and that's why I want to keep it visible right here. So I'm locking in forward on that, and it'll probably get down here to 72.29. That's what I'm looking for. Actually, 628 is a good target right there. Okay. ETH. Let's just look at that one. ETH. Okay, let me lock in a little bit more profit on this, and either we'll do Coinbase on that one. Okay, so on this we're at 44. Just lock in 9 ticks right there. And either now with this number here, you want it to be a little bit bigger than 50 cents probably. You can see the 50 cents works just fine here, but if we bump it to $1, that'd be 100 range. Okay, just made more profit there. That'd be 100 range here. Look at these markets just tanking. We're killing it. We got all the way down there to that number that I gave you and more. The next number down is going to be below the low of the day. The crude is going down to 72. 72 is what it's going down to. Right? This is going through the low of the day right now, and that is at least going to go down to 41.15. The NQ, I can't really give any information. Okay, so let's check. So I want to blow this up. I'm not going to take any trades in these other markets right now, but I want to blow this up on the currency. I could have sworn I got this already. So I want to see what the no trade zone on here. If the no trade zone is disqualifying all the arrows in here right now. Okay, this is the no trade zone, right? So it's not disqualifying anything in here. We're just not getting the arrows, right? Right in here, the long-term direction was flat, so you didn't get any arrows all through here. Then we finally got it, but it didn't come out of there until down here. Right, so now you got a little bit of a gap up right here. So what it's suggesting right now, it needs to pull back down to get into the ribbon or to get this into the oversold, and then you get a little bit of something out of that. But this was either, I mean, it's bouncing around pretty quick right here for the for 100 tick bars. It's bouncing around pretty quick. We might want to actually put this on a 500 tick. Make each bar $5. So you just gave a long trade from right here. Let's do this on a $5 bar. But it gave that long trade from right there pretty accurately. In here, you see all the arrows popping up. It's all the same information. Okay, it's always going to be the same thing. Every one of these bars is $5. Right? Every one of these bars is $5. So in here, it suggested a short off the ribbon right there from 1820 to 1789. Suggested another one like this. Your stop is going to be probably about $6 on each one of these. Okay. So with the 500 tick range, your stop is probably going to be $6, maybe 100 ticks below the bar, the entry bar. So like right here, it'll give you that, then it pulled back and gave you the rest of that up to there. You would have been looking for this. Over here, your entry point was here. You had almost no pullback, went up there. Your entry point was here, almost no pullback, went up there. Entry point was here. About half of the bar pullback, then it went through there. Right? You see, it's the same thing. Crypto. Over and over and over, it's the same thing. It doesn't matter what you're trading. You know, you can do this with Forex. Forex has got this, it's got the spread, so that makes it a little bit different. But things like cryptos and equities and in futures, it's just the same thing again and again and again. And we've been doing this forever. You know, the spreadsheet has our results going back over 10 years, our daily results with futures going back over 10 years. And we fill it out every day at the end of the session. This morning, after 11 minutes, we're up $875. And we ended the session with one contract up $497.50 this morning. And we do this every day, 2 hours a day, 9:30 to 11:30 every business day. If you have not signed up for the free trial and you want to, go to mytradingiq.com, sign up for the free trial right there. It's as simple as that. Okay. It is 1:29. I know we got a little bit of a late start, so if anybody's got any more questions, I will entertain them for a couple more minutes. We'll run over just a little bit. If you have any more questions, anybody. So you can see this one here, it didn't put in a lower swing, so you wouldn't want to take any more trades in that direction. Now it's changing directions here a little bit. I would anticipate a retracement probably to about right here. You probably find some sellers right up in this area right here. I did not. I will do that. I'll do that right now. Hold on. Do that right now while I still can, without getting in any trouble for it. Here it is. There. That is how you take the free trial right there. Just click on that link. It's going to bring you to this website, but this is right here. All right, just click on that, sign up for the free trial. What I was just showing you there, the trade rules that we follow over and over again. You just go to right here on mytradingiq.com and click on trade rules. I mean, you're all in here. You guys that are in the live stream, obviously you're in here with TradingView. So if you sign up for the trial, give us your TradingView ID and we can set you up quick. Just go to trading platforms right here. Follow the instructions right here for the TradingView. Or within trade rules right here, TradingView TIQ context setup rules. Watch this setup video right here. And if you click on this, that will give you a read-only copy of this right now. If I save it right now, I'll give you a read-only copy with this on it. Here, I can save it for you so you have that. If you go here to mytradingiq.com, trade rules, click there. Okay, go back to the ES. Do I have any more to say about the ES right now? Did it hit all those numbers that I said a few minutes ago, Don? Well, let's look at it on the bigger picture. Okay, let's get it on a little bigger picture. That's probably what you're more concerned with anyway, right? So that's 7 minutes. Sorry, on the 30-minute. Yeah, okay, we're right at the midpoint here, Don. Right at the midpoint. Okay, I think I was saying this earlier. Yep, all the way down here. But we should find some support right here. Now let's look left and see if there's any other reason to find support there. Let's just draw a big line right there. We'll extend that every way. There. Okay, so now let's scroll back and see if we can find some reason to have support there. There we go. Support's even a little lower than that. It's going to be right here. Okay, so if we make a copy of this, yep, and that's right at the zone. Right here, you got this bullish cross. So there are a couple of things that are going to draw this down further. You have the midpoint right here, and you have this level right here that's going to be support. So it'll probably bounce a little bit from here. I would think it might go right up to the zone again. If it breaks through that, you have this level right here and then the zone down below. So again, you get to trade what's in front of you, but I think it's going to bounce a little bit right here probably. Right. Trade what's in front of you. That's always been my motto. All right. Is there anybody else in the live stream? Nobody else in the live stream has asked anything. Okay. So if anybody wants to take a free trial with us, to get access to the indicators, you have to sign up for the free trial. You're not going to find them by going and searching TradingView. And the indicators that are on the charts is a TIQ context and TIQ ultimate slingshot. They're invite only, right? They're invite only down here. You will only get those by signing up for the trial. And again, with the trial comes one-on-one training if you need help setting your charts up, all that stuff. Okay, yeah, this is completely mechanical crypto. So if you're just learning, then sign up for the trial in the morning, and I go over it in a lot more detail. You know, the lesson plan. Well, tomorrow's part of the lesson plan. This was today's, and tomorrow's part of the lesson plan is more about the DOMs and stuff like that. DOMs and the weekly trading zones that we just showed. But you missed day 1, 2, and 3 if you sign up right now, but that's okay because we'll do one-on-one training with you and we get you caught up on days 1, 2, and 3. And I go all the time anyway. Okay. So if they sign up for the trial, you get in there and it's as simple as that. Also, if you guys are watching this on TradingView after the fact or whenever you're watching it on TradingView, if you're not following us yet and you want to start following us, then you get notified whenever we do a thing like this. Okay. With that, I think I'm going to end the live stream here. Okay, we had some great trades in the live stream. We had one stop out, but we made up for it with several other really good trades. With that, I'm just going to wrap it up. Crypto, if you want to get started, just go out to mytradingiq.com. Go right here, mytradingiq.com on the home page. Just fill this out. Plus your TradingView username. A lot of people, when they fill this out, for some reason, you know, they click on this and it brings them into this spot here. And down here at the bottom, we say, if you use TradingView, give us a username. I don't know what happens there, but they end up giving us some number, like a 5-digit number, like a zip code or something like that. That's a 6-digit number, so I don't know. But they give us some number here. What we need is for you to put in your actual ID, KRYPTO, and the rest of it. Just put that in there, and then we can set you up right away. Okay, we'll set you up right away with your TradingView. Okay, it's really simple. It's not a hard process. All right, there goes for anybody that wants to sign up for the free trial. I mean, did you see? There's not a whole lot we asked for in here to sign up for the free trial. And why is this taking so long? Anyway, when you sign up for the free trial, this is all that we ask for: name, email address, phone number. Fill out. These are all drop downs. Just fill that out. That's it. No credit card, nothing like that. Okay.
About 30 seconds.
Yep. Do that, and it'll be going this afternoon. All right. Again, I'm gonna wrap up the stream right now because I feel like I'm gonna die. So I'm gonna hit stop stream right now. Everybody that's in the live stream, thanks for coming today. Thanks for watching. If you have any questions, you can email us at support@mytradingiq.com or support@cfrn.net. All right. Thanks for coming today, and we'll see you all tomorrow. All right, the live stream is gone, and now we'll get back out to fabulous Phoenix, Arizona studio A in South America's largest city park.
Doke.
There it is.
Recap of the morning session.
Today it took 11 minutes and 3 trades to get to $875.
Great job.
Thank you.
Okay, guys. We looked at everything. Let's go back to the daily now. At the beginning of the broadcast, I said if price, and I think I might have even said I thought it would, if price trades below these indicators, then the next obvious spot for support is the 24% Fib retracement. We bounced off of it here to here. Then we came back to it and we bounced, but we put in a lower high. So we have a series of lower highs. This one actually bounced a little higher than that high. Okay, but it's all part of my head fake conspiracy theory. So it does appear at this point the market is going to attempt the 24% Fib retracement. Again, keep in mind, Fibs are not proprietary. They're 14th century math. So the institutional traders, the deep pockets, the ones who actually move price, they're well aware that price is headed for the 24% Fib retracement on the daily chart from the October 13th low to February 2nd high. So either A, if they're a buy-only institution, they're going to hit the pause button and do nothing. If they specialize in the sell side, or if they're both buy and sell, then they're going to be selling. Because, I mean, the writing's on the wall, literally. I mean, so we'll see what happens. We made it through all the markets, but we'll do it again real quick. See, we've dropped through that short target a second time. And we're still dropping, and the next zone is down at 40.93. 40.93. And where is that 24? At 40.83. Okay. So maybe we don't make it all the way to the 24 in this session, but we could catch a gap lower open tonight, and that would put us there. Looking left, there's really no imminent obstacles. The last bullish cross took place way down here, 40.85, which is right at the 24% Fib retracement at 40.83. It's really important that you learn to use multiple time frames. Okay, from the daily to the 30-minute to the smaller time frame that you actually execute on. Okay, when price is obviously heading for the short target, on your smaller time frame, you simply look for a pullback to the BBC, a down close, sell the open to the next candle. The price is obviously trying to go to the long target. Okay, you're above the BBC, you've got blue and climbing. On your 7-tick range or 10-tick range, whichever range chart you use to execute on, pull back to the BBC, up close, buy the open of the next candle, bang, go for the day. Dow, we've now traded through this zone, and the next zone is way down at 32,950. And then there's one zone left below that. It's the lowest weekly zone for this week, 32,210. Okay. Russell, just about to hit the short target. We already talked about all of this. We found support at the zone. We found resistance at the zone. We found support at the zone. until proven otherwise. Just what happened here. Now we're almost to the target. In Q, it's already hit the short target and the long target. Found support at the zone, resistance at the zone. Now it's headed back to the zone again. Right here, there was a bullish cross. And so that's what created this little bounce right here. Second time down, we traded through that area. Okay. So with red and falling overhead and price being below the BBC, I would anticipate that price will continue lower once the pace picks back up as the deep pocket institutional traders come back from their 3-martini lunch. Entry spot 32.52 down to 32.42, 13.242. That would be your goal for the day. That would get you an entry below this little area of congestion. So you've got basically a clear shot down to the zone. Crude, we just hit the short target for the second time. Now looking left, where would we expect to find support? Right here. So a nice window of opportunity. $71.70 down to $71.50. That's $200 per contract traded, and that's a very conservative window of opportunity. I mean, this is one where you might consider trailing your stop, because if price takes out this low, it's going to keep barreling down to the next zone. And remember, crude inventory numbers came out today better than expected, which means there's greater supply than was anticipated. And in a supply-demand economy, the more supply there is, the lower the price. The scarcer the supply, then of course price rises. Gold. Okay, found resistance at the zone. We found support at the zone. We hit the long target. We hit the short target multiple times. Okay, now we're above the BBC. And red and falling's starting to curl. So once that becomes blue and climbing, then 2044 to 2045 would be a nice opportunity to go for the day. And then if it makes it all the way to the target from 44, it's $400 per contract. And if it makes it back to the zone, well, you can do the math. Every time the price of gold moves $1, it's worth $100 per contract traded. When the price of crude moves $1, from 73.70 to 73.70 to 72.70, that's $1,000 per contract traded, right there over 2 candles. When silver moves $1, that's worth $5 grand. Silver, we hit the zone, resistance, then we plowed through the zone, hit the long target, got back below the BBC, hit the short target, found support at the zone, and bounced. Step line is just now crossing red and falling. So if price takes out this low, and you got a nice window of opportunity down here, a 2-penny move is worth $100 per contract traded. Now, if the step line fully crosses red and falling, then price will probably pull back to the BBC. And as we know, the pullback holds more often than it doesn't. However, price is quiet right here, right now. But if this candle closes below the step line, then expect continued downward movement with potential support at this low right here. Then clear skies all the way down to the zone below. 2 pennies, $100. Euro opened here, ran up to the zone, which we expect to be resistance, and it was. We got below the BBC, dropped to the short target, didn't make it to the zone. Then that news came out this morning, drove prices higher, drove us through the zone, and only 3 things happen in a zone. 70% of the times consolidation, 20% of the time rejection, 10% of the time the slice. See how this 30-minute candle sliced through this zone like it's not even there? And what happened? When it ran out of steam, price retraced to the zone it sliced through, and then it continued in the direction of the slice. Right there. Over and over again and again. Got red falling. We're below the BBC. So nice window of opportunity right here. Okay. Now, this isn't a set it and forget it thing. This is actively managing your trades. It's really important. I know we all want to have a set it and forget it kind of thing. Now, prices come up off the low a little bit. What would cause it to bounce? Do you have anything here that would tell us to expect to bounce? No, not really. In fact, sometimes a bounce is just a bounce. Yep. I think this is, just my opinion, this is a bounce that will fail. And so my go signal will be a clean break of the current candle low. You know, there's a lot of room down here. 4110 down to just went to 4100. It's 10 points. $500 per contract traded. Could price pull all the way back up to the zone? Sure. We would expect resistance. Just as it dropped to the zone, we expected support. As we move up to the zone, we expect resistance. The step line is right at the zone, just above that's the BBC, just above that's red and falling. So when this bounce runs out of steam, I would gotta wait for price to take out this low of this candle, which is 41.12 1/4. So I would wait for at least 41.10 to enter. Okay, you don't want to get head faked. Okie doke. To become a lifetime member with no recurring fees, no upsells, and no nonsense, go here. EMiniFuturesTrading.com. 9 out of 10 new traders will fail because they do not have someone to teach them how to do the job. A teacher. That's why, as a lifetime member, you'll have lifetime access to the live training room, unlimited one-on-one private mentoring. You'll learn a methodology and own a set of indicators that are fluid across all markets and all time frames. You'll receive the Logic 247 alerts around the clock, the Concierge Trade Alert report each evening when it's published. You'll be able to attend the members-only workshop on Thursday night. All that and much more. It's everything a trader needs, all under one roof, one low price. EMiniFuturesTrading.com. You can call Valerie at 949-42-EMINI. You can also email support@cfrn.net. Now, if you're still a partner, from the old days before we rolled out the passport. Okay. You can upgrade from your current status where you pay a monthly fee to the passport for just a few dollars. Then you don't ever have to pay us again. No recurring fees. The upgrade based on the monthly rate that you were locked at in before. Now, it's been 248 weeks since we rolled out the passport. But anyway, passport means no recurring fees, ever. It's your all-access pass to everything we do, everything we've ever done, and anything new we do in the future. All is in your... All right, let's wrap it up with a good word for the day. Yesterday we talked about the importance of memorizing scripture. You know, as a kid in Sunday school, it was kind of a game, you know, maybe you won some kind of a prize if you got your scripture memorized that the Sunday school teacher gave you last week. But it's far more than a game. It was your Sunday school teacher preparing you for life. Out of the abundance of the heart, the mouth speaks. Our scripture today, 2 Peter 3:10. The day of the Lord will come as unexpectedly as a thief. 2 Peter 3:10. The good news, Christ is coming again. Now, I think I talked to you guys about this the other day. The Left Behind series, first it was a series of books, then movies, and then remakes of the movies. And the other night, we watched the one where Nicolas Cage is the pilot. And my wife found online a bunch of people, a bunch of quote-unquote Christians, squabbling over the fact that Nicolas Cage, the pilot, who they called a heathen, was given a part in the movie. And I was like, don't they get it? He got left behind. People amaze me. Anyway, don't let date setters make you cynical about Christ's soon return. Okay? When the founder of a major church denomination predicted in print the date of Christ's second coming, his successors faced the embarrassment of having to publicly acknowledge that they were wrong. I'm sure most of you remember all the alarmists back in Y2K declaring a scientific certainty that the year 2000 would bring the end of the world and the return of Christ. They caused people to leave their jobs, sell their homes, stock up on food, and head for the hills. And because of such embarrassments, many preachers today have silenced or toned down the truth of Christ's second coming. Yes, when some people hear the message, they roll their eyes and say, "Oh, not again." But doubt about Christ's return is one of the signs that guarantees it will happen. The Bible says, "Know this first of all, that in the last days mockers will come with their mocking, following after their own lusts, and saying, 'Where is the promise of his coming?' For ever since the fathers fell asleep, all things continue, just as they were from the beginning of the creation. The Lord is not slow about his promises, as some count slowness, but is patient toward you, not willing for any to perish, but for all to come to repentance. But the day of the Lord will come like a thief, in which the heavens will pass away with a roar, and the elements will be destroyed with intense heat, and the earth and its works will be discovered. Therefore, beloved, since you look for these things, be diligent to be found spotless and blameless by him at peace. 2 Peter verses 3 through 4, verses 9 through 10, and verse 14. It's a true story. Good news is I've already read the end of the book more than once, and we win. So that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.